All right, so ready to dive in. We're taking a deep dive into Best Buy's latest financials.
Yeah, let's unpack it.
Got their Q3 FY2025 earnings press release, hot off the presses,
Oh.
and you know that fun Form 8K filing with the SEC?
Oh,
Stuff
yeah.
that usually makes your eyes glaze over.
It can be a little
We're
dense.
going to break it all down, make it easy to understand, pull out those nuggets that really matter.
Exactly. Go beyond those headlines and really get a sense of what's going on at Best Buy, behind the scenes.
Yeah, kind of get a peek behind that curtain, right?
Yeah.
So, big picture, comparable sales down 2.9%.
Okay.
Now, at first glance, not great,
Right.
but think back to this time last year, same quarter, down 6.9%.
Oh, wow. Okay.
So, are things turning around? Is this a sign of recovery or just a little blip?
Yeah. Well, that's the question, isn't it? I mean, it could be a sign of, things stabilizing, especially given the crazy economy we've been dealing with.
A roller coaster.
Oh, tell me about it. But comparable sales, that's only one piece of the puzzle.
Yeah, got to dig a little deeper.
Yeah, what's driving those numbers, right? That's the key.
Right. Okay, so let's break it down a little bit.
Okay.
Domestic revenue took a dip, 3.3%, down to $8.7 billion.
Okay.
Internationally, a little bit of a softer landing, down 1.6% to $748 million.
Okay, so, I mean, given where the U.S. economy is right now, inflation cooling down, but consumer confidence still a little shaky, makes sense, right? People holding onto their wallets a little tighter.
Makes sense, especially for those, non-essential items, those big purchases, maybe thinking twice.
Exactly, exactly.
And what about internationally? Best Buy, they're mostly in Canada, right?
Yeah, primarily Canada.
So I guess those same economic pressures are probably at play up north.
Yeah, definitely. I mean, the Canadian economy often mirrors what we see in the U.S., so
Yeah.
makes sense.
Okay, so revenue, kind of a mixed bag, but I think it gets really interesting when we look at what's actually selling, or maybe more importantly, what's not selling.
Okay, let's hear it.
Biggest sales slumps, appliances, home theater, and gaming.
Interesting.
So are people just waiting for those, Black Friday deals, or is there something else going on?
Yeah, good question. I think it's probably a mix of things, right? These are big ticket items, and when the economy's uncertain, people tend to postpone those big purchases.
We got to prioritize.
Exactly. Plus there's always something new coming out in those categories, right?
The latest and greatest.
The new gaming console, the fancy new TV.
Can I have it?
Yeah, so people might be holding out waiting for those next big releases.
Makes sense.
Yeah.
But then there's the flip side. Sales of computing, tablets, and services actually up.
Okay.
So are we all just workaholics glued to our screens, or is there something else driving that trend?
Well, I mean, let's be honest. That whole work from home, hybrid work thing, that's definitely fueled the fire, right? We need our laptops, tablets, good internet connection.
Got to stay connected.
Absolutely, but hey, let's not underestimate the power of, those shiny new gadgets.
Oh, yeah, the temptation is real.
There's always that allure of the latest tech, even if we don't really need it,
Need to convince ourselves we do.
Exactly.
Speaking of things we might not need but definitely want, that service revenue jump, that was pretty interesting.
Yeah, okay.
Best Buy has been pushing their Total Tech memberships, in-home consultations. Is this a sign of, where retail's heading?
Yeah, could be. I mean, services, they offer that recurring revenue stream, right? And it's a way for Best Buy to build a deeper relationship with their customers.
Yeah, it's not just like a one-time transaction.
Exactly. They go from just being a store to being a trusted advisor, someone you can rely on.
Right, like a partner, almost.
Yeah, I think it could be a really smart move in the long run.
Okay, so we've got the numbers, but what's the story behind them?
Right, yeah.
Best Buy CEO Corey Berry mentioned macro uncertainty, customers waiting for sales events as key factors. Does that line up with what we're seeing in the data?
Yeah, absolutely. I mean, it confirms those trends we were just talking about, right? People are hesitant to spend, especially with the economy being a little unpredictable.
Makes sense.
They're being strategic, waiting for those deep discounts during the holidays.
And Berry also talked about uneven customer behavior. So sounds like they're expecting anything this holiday season.
Yeah, that's smart. I mean, in today's retail world, you got to be agile, ready to adapt.
Gotta be on your toes.
Exactly. Adjusting inventory, promotions, even staffing based on what consumers are doing right now.
Yeah, no crystal ball.
Nope. Gotta be ready for anything.
Okay, so Conscious optimism from Best Buy HQ. Let's talk future outlook. They revised their full year guidance downward. They're expecting sales to keep declining, but here's the interesting part. They're still aiming for operating income expansion.
Oh, okay.
How do you reconcile those two things?
It's a balancing act, right? They're really focused on profitability, even with less money coming in the door.
Right.
So that might mean, optimizing their supply chain, getting really good at inventory management, maybe even, a slight price bump here and there.
Interesting. Okay, and what about Q4?
Yeah.
They're projecting flat to down 3% comparable sales, but still anticipating an increase in their operating income rate. Sounds like you're putting a lot of faith in the holiday season.
Well, for retailers, the holidays, that's make or break time.
Yeah, that's the big show.
And Best Buy's no exception. So they're betting that their promotions, their product mix, their customer service, all of that, it'll be enough to attract those shoppers, even if overall spending is down.
So there's that conscious optimism again.
It's a theme.
Yeah. It is. But let's dig a little deeper for those who really like to geek out on the details.
Okay, I'm ready.
What about their gross profit rate changes? They highlighted services as a positive, but also mentioned lower profit sharing revenue from their credit card arrangements and lower product margin rates. What does all that mean for the average consumer?
Yeah, well, I mean, it boils down to this balancing act between staying profitable and staying competitive, right? So those lower product margin rates, it suggests they might be absorbing some of those cost increases, the ones we've all been feeling, rather than passing them all on to shoppers.
Okay, so good news for our wallets.
For now.
Yeah, and they also briefly mentioned share repurchases and dividends. We won't go too deep into that, but something to keep in mind for those who want to do their own research.
Always a good idea to dig deeper.
Always good to be informed. All right, so we've covered a lot of ground. We've looked at overall sales, revenue by region, even delved into those specific product categories that are driving those numbers. Before we move on, there was one thing that really jumped out at me.
Oh, okay. What's that?
Remember how we were talking about those sales declines in appliances, home theater, and gaming?
Yeah, yeah.
But within entertainment, there was a really surprising surge last year.
Okay.
Domestic entertainment sales, same quarter last year, jumped 20.6%.
Wow, okay, that's a big jump.
That's huge, yeah.
Yeah.
So I don't know exactly what caused that, but it makes me think about, maybe new gaming consoles, streaming devices
Yeah.
that were coming out around that time.
Right. Yeah. Makes sense.
Maybe even some pent-up demand from earlier the pandemic, when people were staying home more.
Yeah, that's possible too.
So it just shows how important it is to look at the context of each quarter,
Yeah.
timing of product releases, all those bigger societal trends.
Absolutely. I mean, what might look like a long-term pattern, it could be influenced by those short-term factors.
Yeah, it's all about the nuances.
Exactly.
So as we head into part 2 of this deep dive, keep that in mind. We'll be going even deeper into Best Buy's financials, exploring their profitability, cash flow, really getting a holistic view of their financial health.
All right, looking forward to it.
Should be fun. Thanks for listening.
Yeah, thanks everyone.
Welcome back. Ready to keep digging into those Best Buy financials.
Let's do it.
All right, so last time we talked about sales trends, those economic factors that are kind of pushing and pulling those numbers.
Right.
Now, I want to zoom in on their balance sheet. It's like a financial snapshot, shows their assets, liabilities, really gives us a sense of their overall strength.
Yeah, it's like checking their vital signs, making sure everything's, healthy.
Exactly.
So what do we see? Well, their total assets stand at $17 billion, up slightly from last year's $16.9 billion, indicates they've been strategically investing in their business.
Right. So that could be what, inventory, maybe tech upgrades, even store expansions potentially.
All of the above, potentially, yeah. They're making sure they're, positioned for growth.
Okay, so they've got assets, but what about liabilities? Those financial obligations they're on the hook for.
Right. Well, their total liabilities have actually decreased a bit to $13.9 billion, down from $14.1 billion last year.
Okay.
Much of that is due to higher accounts payable, which could mean they're carefully managing their payments to suppliers, stretching things out a bit.
Interesting. Could that also be a sign of, stocking up on inventory for the holiday rush, getting those shelves full of all the goodies shoppers want?
It's definitely a possibility. Retailers often, ramp up their inventory ahead of the holidays, got to make sure they can meet that surge in demand.
Yeah, got to be prepared.
Of course, there's always a risk, right? If if those items don't fly off the shelves, you're stuck with that unsold inventory.
Right, which can eat into profits later on.
Exactly. It's a delicate balance.
It is. It is. Now let's talk about equity. The ownership stake in the company. Best Buy's equity has grown to $3.1 billion, up from $2.8 billion last year.
Okay, that's a positive indicator. It means the company's value is increasing even in the midst of all this, economic uncertainty.
Yeah, so they're investing, managing their liabilities, their equity's growing. But what about the actual flow of money in and out of the company?
Right, the cash flow. That's where the statement of cash flows comes in.
Exactly. Tracks, the lifeblood of the business, shows how cash is generated, how it's used to fund everything from operations to investments to those shareholder returns we talked about earlier.
Yeah, it's a key financial statement.
It is. It is. So starting with operating activities, Best Buy generated $561 million in cash. That's actually down significantly from $2.9 billion last year.
Okay, so that decrease is likely due to several factors, right? The lower sales volume we discussed, that plays a role. And there might also be some increases in operating expenses.
Right, so less cash from operations. What about investments?
Well, they used $522 million for investing activities, mainly for additions to property and equipment.
Okay.
This aligns with their long-term strategy of investing in the business, making sure they have the infrastructure, the tools they need to thrive.
Makes sense. And finally, those financing activities. Best Buy used $892 million for things like share repurchases and dividend payments.
Right. So this shows they're committed to rewarding their shareholders even during, a challenging year.
Yeah, got to keep those investors happy.
Exactly. Those share repurchases, they reduce the number of shares out there, potentially boosting earnings per share, and dividends, well, they provide a direct cash return to investors.
It's like they're sharing the wealth, even if the pie isn't quite as big this year.
Yeah, that's one way to look at it.
All right, now let's circle back to that non-GAAP ROI we discussed earlier. It was down year over year, which suggests some potential challenges with capital efficiency. But you mentioned there was a nuance there. What did you mean by that?
Yeah, so if you actually break down the components of that calculation, you'll see their adjusted operating income after tax actually increased.
Oh, interesting. So they're actually making more profit from their operations, even if their overall return on investment isn't as strong.
Exactly. It's not just a simple story of decline. There are both positive and negative signs woven into these numbers.
Yeah, got to look at the whole picture.
Absolutely. Understanding the context behind those metrics, that's key.
It's about connecting the dots, not just focusing on isolated numbers.
Couldn't agree more.
Okay, I think we've got a good handle on the overall financial health of the company. But now I want to shift gears a bit and talk about something that directly impacts all of us as consumers. Best Buy's revenue mix. Which products are driving their sales, and what does that tell us about what people are buying or not buying?
Yeah, this is where we can get a glimpse into, consumer preferences, how they're evolving. It's about understanding those bigger trends that shape the retail landscape.
Right, so looking at their domestic segment, their largest category is computing and mobile phones, making up a hefty 47% of their revenue.
Okay.
Which, it speaks to the essential role those devices play in our lives, right? From work to communication to entertainment, they're woven into our daily routines.
Yeah, we're tethered to those devices.
We are, and it seems like demand is still strong even in this uncertain economic environment.
Right, and they actually saw a positive comparable sales growth in this category, up 3.8%.
Yeah, that's pretty impressive.
It is, but, it's important to remember that this category, it encompasses a wide range of devices.
Right.
From, those high-end smartphones and laptops to more budget-friendly options.
Okay, so people are still investing in their tech. What about those fun, wants rather than needs? What's happening with consumer electronics? TVs, headphones, cameras, all that good stuff.
Well, that category, it makes up 28% of their domestic revenue, but unfortunately it saw a dip in comparable sales, down 5.8%.
So maybe everyone's holding off on upgrading their entertainment systems until those Black Friday deals hit.
Could be, or, maybe it's related to last year's entertainment sales surge, that 20.6% jump we talked about earlier.
Right. Maybe it's a combination of both, savvy shoppers waiting for deals and a bit of a natural correction after a period of strong growth.
Yeah, it's possible.
Okay, next up we have appliances, those big ticket items, refrigerators, washers, dryers, all that. They make up 12% of their domestic revenue. And, with mortgage rates still relatively high impacting the housing market, it's not surprising to see this category struggling a bit.
Yeah, I mean, these purchases are often linked to new homes or renovations.
Right.
So when that market cools down, it definitely ripples through to appliance sales.
And their comparable sales in this category were down a substantial 14.7%.
Yeah, that's a pretty steep drop.
Yeah, it's a tough time for the appliance industry right now. People are postponing those major purchases unless they absolutely need a replacement.
Makes sense.
All right, so tech is holding strong. Entertainment's dipping a bit. Appliances are taking a hit. But there's one category that I'm particularly curious about. Services. It's still relatively small at 7% of their domestic revenue, but it's showing some really impressive growth.
Yeah, this is the area where Best Buy is really strategically trying to transform their business model, going beyond just being a product retailer.
Right. It's about building those deeper customer relationships, offering things like their Total Tech membership program, in-home consultations, even repairs.
Exactly, becoming more of a solution provider.
Right. And their comparable sales in this category were up a healthy 6%.
Okay, so that suggests consumers are embracing those services, finding value in that expertise and support.
Yeah, I think it's a smart move by Best Buy.
I do too.
They're not only generating that recurring revenue we talked about, but they're also differentiating themselves from competitors.
Right, becoming more than just a place to buy stuff.
Exactly.
Yeah.
So we've covered a lot of ground here, their balance sheet, their cash flow, their revenue mix, and those bigger trends that are influencing consumer behavior.
It's been a thorough examination of Best Buy's financial picture,
Yeah.
really connecting those individual data points to paint a broader narrative.
And in the final part of our deep dive, we'll be looking at their profitability, those factors impacting their margins, and really drawing out those key takeaways from this earnings report.
Yeah, we'll synthesize all those insights, exploring what it all means for Best Buy's future and what we can learn about, the ever-evolving retail landscape.
All right, sounds good. We'll be back in a flash.
Stay tuned.
All right, we're back. Final stretch of our Best Buy deep dive. Ready to talk about the bottom line, their profitability. Are they actually making money? And are they doing it efficiently?
Yeah, I mean, that's the key question, right? A company can, generate a lot of buzz, but at the end of the day, it all comes down to those profit margins.
Got to make those dollars, right?
Exactly. Got to make those dollars. So let's start with their gross profit. That's the revenue remaining after they've covered the cost of, making or buying the products they sell.
Okay, makes sense.
So their domestic gross profit landed at $2.05 billion for the quarter, down just a smidge from last year's $2.06 billion.
Okay, so tracks with those lower sales figures we talked about.
Yeah, exactly. But what's more revealing is their gross profit rate. That tells us how much profit they're making on each dollar of sales.
Okay, and what does that look like?
Well, their domestic gross profit rate actually went up to 23.6% compared to 22.9% last year.
Okay, so that's good, right?
That's a good sign. Yeah, it suggests they're managing their costs well and maybe even benefiting from some favorable pricing.
And remember how we were talking about, the strong performance of their services category?
Right, yeah.
That probably plays a role here.
Absolutely. Services typically come with, juicier profit margins compared to just selling physical products.
Makes sense.
So that shift that Best Buy is making, becoming more service-oriented, that's definitely helping boost their overall profitability.
Interesting. Okay, so gross profit is looking good, but what about operating income? That's the profit after you factor in all those, operating expenses like salaries, rent, marketing, all that.
Yeah, operating income, that gives us a clearer picture of, their core operational profitability.
Yeah. Okay, and what's the verdict there?
Well, domestically, their operating income came in at $337 million, just a hair below last year's $336 million.
Okay. Again, kind of in line with the overall dip in sales.
Right, exactly. But just like with gross profit, the real insight is in their operating income rate, the percentage of revenue that turns into operating profit.
And is that up too?
It is. It's up to 3.9% compared to 3.7% last year, so another positive trend.
That's impressive. I mean, they're navigating a tough environment, but still managing to stay profitable.
Yeah, they're demonstrating, real resilience, being able to adapt and maintain profitability, even with all those headwinds we've been talking about.
Right, and, thinking back to Best Buy's stated goal of achieving operating income expansion for the full year, This suggests they might actually be on track.
Yeah, it's definitely possible, but, we got to remember, the holiday season, that's huge for retailers. Their Q4 performance, that's going to be the real test.
Yeah, it all comes down to those holiday
It
shoppers.
does. It does.
All right, so let's zoom out for a second. We've done a deep dive into Best Buy's Q3 FY25 earnings. It's been quite a journey. Looking at their financial statements, uncovering those hidden trends, those key insights.
Yeah, we've gone beyond just, reciting numbers. We've really tried to understand the context, the motivations behind those figures.
So, big picture, what's the takeaway here?
Well, Best Buy's facing some challenges, no doubt about it, but they're also showing, remarkable resilience.
Yeah, their comparable sales are down, but they're doing better than some of their competitors. And that trend of improvement from last year, that's definitely a good sign.
Right. They're adapting to, the changing consumer behaviors, leaning into services, really focusing on offering value to their customers.
And we saw evidence of, effective cost management in those improved gross profit and operating income rates. They're running a tight ship.
They are, and they're also, staying committed to rewarding their shareholders with those share repurchases and dividends. It shows, confidence in their long-term prospects.
Okay, so there are definitely some bright spots, but we got to be honest, there are also some areas of concern, right?
Yeah, of course. I mean, that decline in non-GAAP ROI, that suggests they might need to, take a closer look at their capital efficiency, make sure they're getting the most out of their investments.
Right, and their cash flow from operations, that took a dip. Plus, there's that ever-present economic uncertainty. That could definitely impact consumer spending in the coming months.
Yeah, lots of factors at play.
It's a mixed bag for sure, but there are those glimmers of hope, those positive signals that Best Buy is well equipped to navigate, these choppy waters.
I think so too.
We talked a lot about their push into services, this strategic shift, going beyond just selling products. Do you think that's a sustainable strategy long term? Or is it just a way to, kind of offset those declining product sales?
That's the million-dollar question, isn't it? I mean, it's too early to say for sure, but it's a trend worth watching. It speaks to, a broader evolution in the retail landscape, this idea of offering a more holistic customer experience, becoming a trusted advisor, not just a transactional storefront.
Yeah, it's all about adding value, right?
Exactly. It's about understanding, the needs of the modern consumer and finding ways to meet those needs in a way that's both profitable and sustainable.
Well, there you have it, a deep dive into Best Buy's Q3 FY25 earnings. We've crunched the numbers, explored the trends, and hopefully equipped you with the knowledge to make your own informed decisions, whether you're a Best Buy shopper, an investor, or just someone who's curious about the world of business.
It's been a pleasure joining you on this journey.
Likewise, until next time, stay curious, keep exploring. Thanks for listening.